It's time for the big three. We've got 3 stocks and 3 charts for you. Rick Ducat, of course, here to take us through the charts, here to take us through the trades today. Aquiles Larrea Jr., the founder and CEO of Larrea Wealth Management. Great to have you both with us. Aquiles, I'd love to start with a big picture thought on the market action that we're seeing as we are now kicking off the all-important Fed week.
Yeah, there's a lot of interesting things coming up before the Fed meeting. A lot of what I would call snoozing things first. But let's talk about where we think the market's going. First off, we're seeing inflation start to creep up, and hence the Fed action or inaction coming up on Wednesday. Second thing, we're also seeing an increase as far as corporate earnings are concerned. And we're seeing anywhere between 5 to 9%, which could raise the S&P easily into the 7,400 range for Q1 26. So that's another thing we're seeing. Another thing we're seeing in the technology, I mean, not everybody is going into the AI space at this particular point. And there are a lot of opportunities in aerospace, a lot of opportunities in infrastructure. So this is another area that we're looking at very closely at this point. We think overall the positive sentiment is the market is moving in the right direction, although we are starting to lose a little steam at this particular point, but full steam ahead easily when Q1 comes out.
Yeah, we could use a little steam this morning right now. I was just checking the board while we were talking. The Russell's still holding on, but the rest under pressure. And so are your choices today, too. I was across the board, all 3 under pressure. Let's talk about the first one. You've got Alphabet as your first one. Walk us through this first pick for the big 3.
Yeah, and, I'm not a big believer in only owning the biggest in the sector. When we're talking about chips, they came out with a chip that was exciting because it's competition for NVIDIA. Why not own both of them? High quality in the portfolio. And what better time to own it than when people think that increased competition is going to drive prices down? If you've learned anything about this particular sector, prices aren't going down anytime soon. We're still, as far as the AI boom, as far as the infrastructure, in its infancy. Although it is right now starting to go up a little bit more, but valuation is a very tough thing to put at this point. We're looking at a double-digit growth in this sector. For Google, Alphabet, we're looking at anywhere between 12 and 14%, and I would say that's on the conservative side at this particular point. It's important to note out, you want to own both of these type stocks. If you want a high quality tech in your portfolio, this could be a great addition. Or if you're accumulating, you own it already, not a bad price point to get in. And for long-term hold, could be high quality. Then another thing that I would say, as far as this particular stock is concerned, it's not all about the chips. There's plenty of room for growth at this company. And as we say here with the lottery, you got to be in it to win it.
I absolutely got to be in it to win it. And this is a conversation we've had a lot when we talk about Alphabet and Google when they entered this potential chip trade here, is that they have so much diversification and so many different growth drivers here. But you mentioned maybe a good point to get in. Right now trading at 316.25, down about 1.75%, Rick. When we look at the chart, I can see this steeply upward moving channel, but what are the technicals telling us?
Yes, and if you were to look at it a little bit more from a granular perspective, you can see that it has this stair-step type of price activity of rapid surges to the upside followed by horizontal consolidation. So right now it seems like we are within another of these more horizontal phases here. You could say very short term, between about 315 to 325 or so. But really, if you were to expand out a little bit, around 307 or so is where we had our highs roughly before we had our gap to the upside here. So perhaps 306, 307 to the downside. Then our intraday highs 328.67. So that gives us some points to consider here going forward. When we do look at our exponential moving averages here, our yellow 21-day EMA comes in at about 304. So around that where that gap would be filled, there would be an additional source of support here. Below that, 291, a series of old highs as well. In terms of our moving averages, though, not really too much else is close enough to warrant any more attention than that here. here. When you have these fast movements to the upside, the moving averages get left behind. They're a lagging indicator by nature. RSI giving us kind of an interesting situation here to consider here. Triangular trend lines converging toward each other, rapid and repeated crossovers into the overbought territory. But now we have given that up for now. It'll be interesting to see what happens if we break below that green trend line as well. So finally, when we look at our volume profile study, you can easily see the trading nodes here, these heavy trading activities, kind of lining up with these horizontal ranges. So right now, we're within the node near about 320 or so, and the next node to the downside is around 385. So those are the points to consider from that line of thinking.
Yeah, and right now 316.31. We're up about 80% over the last 6 months when it comes to Alphabet. Very different story though with this next pick. Critical metals heavily under pressure the last month. They've been down, close to 12%. Walk through your thesis on this one.
Yeah, it's funny. This is the type we're value buyers, so we're always looking for undervalued securities. We're also seeing the relationship between China and the U.S. affecting it at this particular point. Have to remember we had a trade war, haven't resolved that at this particular point, but the stock is what I would call risk capital. So if you're going to take 1 to 3% of your portfolio and put it into a name like this, you should be well rewarded going forward. Yeah, it's been under pressure to the tune of double digits, but when is the best time to buy something that everybody needs? The U.S. needs these rare metals, and China is the biggest supplier of this. We do not really have a supplier here in the United States. So this company, Critical, is what I feel the best value in the sector right now, and could be easily double-digit, working its way back on a double-digit positive side. We think that it's undervalued at this particular point, could go up about 10% in the next 18 months. But it is, I repeat, risk capital. What we see going forward with a stock like this is that there was potential, there was it was necessary, but now it should be part of the risk capital part of our portfolios and give things a little bit of high octane too. Could go down further, we would accumulate more. Right now we're quietly accumulating. Could get a little more aggressive if it should go down another point, but I don't see that at this particular point. I see Washington and China and Beijing actually working on solutions for the betterment of trades, and this stock is going to be a beneficiary of that long term.
And Aquiles, you mentioned high octane. Now, I said they had been under pressure the last month, but when I look at the last 6 months, they're up almost 600%, which you can clearly see that spike popping there on the technicals here. So, Rick, walk us through the action that we've seen, where we clearly had a peak, but we've since, fallen way off of that.
That spike represents many different things to me here, because if you were bullish in this name and you made a good trade, that's great. But it also represents legislative risk here. You can see that this is kind of the area when the government started taking a stake in lithium companies and everything. So just something to consider, that the landscape could change very quickly in this particular region here. But $7, our green line here, stands out because it was old resistance and then it was support once again. And then we can see it came back into prominence here as a ceiling. Then we had our explosive push to the upside. We retreated back to that $7 level, and we held firm though. So this was a notable test of potential support here that did hold on. Now we have re-entered above our white upward sloping trend line there that was just very briefly broken. So that could be an area to watch going forward. Now that comes in maybe around 9 right now. Some other high points to consider here. Our next set of relative highs around 1166. And another here around 1388 or so. Those could be some upside levels to watch. When we look at our moving averages here, price has held on above all 3 of our moving averages. We crossed above, and we are on our 63-day EMA in orange there. That comes in right around the 950 level or so, so a short-term point to consider. RSI improving. Green trend line in play. We are above the 50 midline, suggesting greater bullishness. Finally, when we look at our volume profile study, point of control all the way down here, the heavy trading areas are below where we're at right now. Another large node here near the $6 level. To the upside, things really start to thin out once we get above 16, so that could be the point where we start seeing some very fast moving prices. Still a ways to go, though, from where we are now.
All right, and right now trading at 966 for critical metals. This last one, an interesting one that we've talked about a bit over the last week. They had their earnings. We've seen a bit of tug of war between the bulls and the bears about their thoughts. Then they announced this $1.5 billion stock offering. That was not met with a lot of positivity from the street. We're talking about SoFi here. You know, why is this your third pick, Aquiles?
Yeah, we think in the financial sector has been beaten down quite a bit. We've seen a lot of near-term resistance. I'm sure Rick will agree with me. It's just the whole sector as a whole has been beaten down. We think that in terms of valuation, the stock is still undervalued. We think that it's going to be heading up 10 to 14% in an 18-month period. And we base that based on what we've seen in the past with this stock. If you just look at what we're seeing here, this has been beaten back, the whole sector as a whole. We want to make sure that we're owning in the financial sector high quality stocks. We believe that this is one of them, but we also see this as a turnaround target to make even more money at this particular point. SoFi is one of these technology companies. You know, it could be $20, and then the next thing you know, it could be 40. You know, it's one of those stocks where it hasn't really found its footing right now. So there's a lot more potential in this stock that we see going forward, and the whole sector is starting to turn around right now. So that's another boon for this trend.
All right, Rick, so as we take a look at SoFi and fintech, and Aquiles highlighted potentially some of the areas of resistance, you know, where are we seeing those in terms of on the technicals?
Well, resistance in the short term could be found first right about here, just above current prices, 28.48. That's the low point before we had our gap down. So that's one very short-term resistance point to consider, see if that gap gets filled, and then see what happens. Beyond that, we have our next set of relative highs near about 30.42. But if we were to backtrack a little bit here, we had our blue trend line sloping upward, and then things have gotten a little bit more choppy here. You can see our notable low points. One right here, 24.84, was a intraday low. We had another here, 23.70. In terms of closing prices, we managed to hang on above that same level. Our intraday low held on around that same point as well. So some encouraging signs for the bulls despite a bit of chop here. Notice as well, until we had this point, we also were seeing gradually grinding upward price activity in terms of our highs here. So now, if we do manage to reassert ourselves in terms of a bullish trend line, we could see this white trend line being broken, and we could see these resistance levels become the next tests. So now we can see our moving averages here. We are between our yellow 21-day and orange 63-day. Some very short-term boundaries, 27.35 and 28.33 could be some points to watch. Momentum slowing down somewhat here, still trending downward here and across below that 50 midline. However, what you would want to see would be RSI making some kind of breakout in tandem with price activity. So if we do start to see momentum rise again, look for price and RSI to break out together. Our volume profile shows much of the trading activity is in this large kind of lump here between about 25 to 29. So if we start getting above 29, that's the thin trading areas. That could be the fast-moving breakout activity that you might want to be on the lookout for. And if you do start to move below that volume block here, it's our supportive zone once again between about 24 to 25 or so.
Yeah, and that's just below where we're trading right now, 27.25 for SoFi. Down close to 2% today, but year-to-date trading up 76% higher. Want to thank you both for being with us today, of course, for the big three, Aquiles Larrea from Larrea Wealth Management and Rick Ducat, our chart master here on Schwab Network, for always being with us.